Hello and welcome to the Friday Market Update. Well, a new chapter is about to begin. Fed Chair Jerome Powell's tenure is set to end in May, closing one of the most turbulent chapters in modern Fed history. A new chapter is expected to begin with Kevin Warsh, President Trump's nominee. First, let's talk about mortgage rates. Really boring right now. They really were mostly unchanged this week, ending at 6.16% for a prime conventional borrower, according to Mortgage News Daily. FHA and VA mortgage rates remain below 6%, which is great news. It's a great interest rate that people can get into. Steady as she goes, we like steady. Now, Powell's time as Fed chair was defined far more by turmoil and uncertainty than by traditional economic fine-tuning. There was no fine-tuning going on. His tenure became an extended exercise in crisis management. The most consequential misstep of his term was labeling inflation as transitory. Under Powell's watch, the Fed badly underestimated how persistent inflation would be, and the consequences are still being felt today. People feel like they're spending so much money on things, and it's because of the inflation that happened during his term. Now, rates were cut to zero during COVID in response to a perceived economic emergency, followed by a surge of inflation that ultimately forced the Fed into 11 rate hikes. So they dropped it first and then they increased it. It was very turbulent. And in many ways, Powell spent the latter half of his tenure just managing the crisis that was, and in my opinion, self-inflicted. We are still battling it, but I do believe everything is finally coming to a very steady close. Now, let's talk about doves versus hawks. What in the heck is a dove? What is a hawk? On the Fed committee, members are often described as either a dove or a hawk. Doves prioritize economic growth and jobs and more comfortable with lower interest rates. They tend to push for rate cuts. Hawks prioritize fighting inflation. They favor higher interest rates to slow the economic activity so inflation does not get out of control. That's kind of what's happening right now. Now, where does Kevin Warsh fall, the new Fed chair that's the nominee? Contrary to what some may assume, especially since President Trump nominated him and has been vocal about wanting lower rates, Warsh has historically leaned more hawkish. He has consistently emphasized credibility, inflation, discipline, and long-term stability. Those priorities typically require independence, not obedience. I do not believe for a minute he is going to go rogue. And remember, he's only one vote. President Trump ran on lowering inflation while maintaining a strong economy. He has repeatedly said interest rates, including mortgage rates, are too high. He wants a Fed leader who can look forward rather than solely relying on backward data, looking in the rearview mirror, and someone who can anticipate economic shifts instead of just reacting too late. In Kevin Warsh, Trump believes he has found that person. So will interest rates drop the minute Kevin Warsh is sworn in May? Hopefully he gets through. Not so fast. Now, there are 19 Federal Reserve officials on the Fed committee with 12 voting members who determine the monetary policy, meaning do the rates go up or do they go down on the Fed funds rate? Kevin Warsh is just one vote. Even if he leans more dovish than expected, he would still need to lead and persuade the rest of the committee that lower rates can be achieved while maintaining the Fed's dual mandate of maximum employment and price stability. It's a balancing act. So do not buy into the narrative that the Fed is losing its independence. It is not. Fed independence is structural. It's not personality driven. There are too many safeguards in place. A change in leadership does not automatically mean a loss of independence. What matters most is how policymakers interpret and respond to data and the economic conditions over time. Will the new leadership take a different approach to the data the Fed has relied on in the past? I certainly hope so. There are too many independent and credible data sources available to be used as supporting inputs instead of relying almost entirely on the government reports, which they have in the past. The reality is that the data that has come out has been wrong out of the gate, which is what Wall Street relies upon. And then they have major revisions that happen even 2-3 quarters later, especially when it comes to the jobs numbers. It has been atrocious. Now, the goal is stability, not sharp drops or sudden spikes. Steady as she goes wins. So let's hope for a steady as she goes, lowering little by little. And I believe Kevin Warsh is going to be a great new Fed chair, and I hope he gets confirmed. Now, what is the best way to refer me? Start a group text with me and your client, and I will jump in and take it from there. We'll get them pre-approved, get them ready to go out shopping with you. So let's do this. Let's have a great year. Until next Friday, keep on winning. This is Gaylord out. Bye-bye.